Hey, good morning, everybody, or evening, depending upon where you're at. Pura vida, ¿cómo están? Estoy en mi
G'day.
casa. I remember, this is really weird, but when I took Spanish in elementary school, I think I was in like 10th, maybe 8th grade or something. I still remember the first dialogue that I learned as a kid. It's weird. I still remember it. ¿Está Susana en casa? Sí, está con una amiga. ¿Dónde están? ¿En la sala? No, en la cocina. Hey,
And
Susan.
what does that mean for those of
It
us that
means,
don't speak Spanish?
hi, is Susanna home? Yes, she's with a friend. Where are they? In the living room? No. Are they in the kitchen? No, they're in the living room. I mean, that's all you need, man.
Well, exactly. That's what I'm thinking. That'll get you around Costa Rica.
Yeah.
How you been?
How you doing, buddy?
I am sensational.
Nighttime there, huh?
It is 11 o'clock. The family's asleep and the markets are building momentum. Although we'll see how much longer that continues.
Yeah, we shall see. It's a big week. Let's go ahead and get started. I'm going to go ahead and read the disclaimer, and we're going to do a little market analysis. I've got a couple of ideas for trades for today. Matt does as well. We're going to look at our past performance, the 2 trades we put on three trades actually from last week. All right, let's get this done. Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. All right, let's hop in and start doing some analysis on the markets. It's a big week. As you probably have heard me say and Matt say, many people are saying the Fed meets tomorrow and Wednesday, and an interest rate hike is coming on Wednesday at 2 p.m. Eastern Standard Time. It's expected somewhere between 75 basis points to 100 basis points, which translates to 0.75% and 1%. Now, all of that has been known for a while. The markets, nonetheless, have risen in anticipation of the interest rate hike. So it's a little bit perplexing, but it's it's the thing about trading that's, I wouldn't say it's a struggle, but it's a constant, what's the word? It's a constant, I have to constantly remind myself that trade what I see, not what I think should happen, or not what I believe should happen, or not even what I hope or want to happen. You got to trade what you see, take all the evidence, and do the best we can to predict the future. So the markets are currently not open. They open at the bottom of the hour. We don't have any live charts to look at unless we go to futures. So this is a chart I put up last week. Let me enable transcription for James. And then I'm going to turn that off here one sec. All right, annotate. Sorry about this. All right, I can't get it turned off just yet. All right, so we're going to hop into the futures. Before we do that, though, let's take a look at what's up outside of futures here. Okay, so everything is up. The Dow, the NASDAQ, the S&P 500, oil is up, treasuries are up. Markets face what could be the most important week of the summer with Fed earnings and economic data. So it's a big week. It's a big week. It's earnings season.
Recording in progress.
Yeah, thanks for turning that on. All right. Oh, NFL streaming service, NFL launches. Oh, wow. Oh, my God. That is the best news ever. Ah. All right. I'm an NFL fan. I just saw that.
Subscription statuses just went through the roof.
Yeah, I know, man. That is huge. I wish the NFL was a public company. There's this thing. Has anybody ever heard of monkeypox? This is something that WHO declares rapidly spreading. I did a quick read on it. Never heard of it before. Apparently, I don't know much about it at all, but it's apparently starting to spread in Europe. I don't know what that is exactly. I got to dig in. So we got earnings this week. We've got the Fed. Just reading through here quickly. You know, tech stocks are announcing this week, so we could see there's a lot of things that could move the market up, down, perhaps in a volatile fashion as well. So let's take a look at the four corners of the market. I'm going to start in Thinkorswim simulated environment. Not recommending Thinkorswim. It's a great platform, and there are other great platforms. All right, so here's the E-minis, the S&P 500 mini futures. And this level here at 4,000 is huge. It's huge. We've hit it twice last week. We hit it on Friday of last week, came back down from hitting 4,000, and then we pulled back a little bit. That's strong resistance. I think it's going to hold. I've been saying, I said 3,900 I thought would hold as well. That didn't happen. 4,000, even stronger resistance level because it's an increment of 4,000, you know? So, you know, I think that's, you know, it's same story. It's either going to hold or it's not. Yet on Friday it held. We got to pull back away. And then today we're up just a little bit pre-market. We're up about 0.33%. So that's the story there. And it's the same across the board on all the other market indices as well. We take a look at the NASDAQ. Similar pattern, different resistance level. Currently, super strong resistance right up here. And we are wrestling with 12,500 on the NASDAQ. So same pattern, different support resistance levels. I guess we could call it 12,600, 12,500, 12,500 right there. Support there, resistance there. So I like these key levels. They're really important. They help us, you know, predict where the market might go next. And currently that resistance level is holding with interest rates being hiked on Wednesday, earnings coming out. You know, we'll have to see. So it's exciting. I love it. I'm excited about it. I'm looking forward to the week. The Russell 2000, similar pattern. 18,000 or 1,850 resistance there. That's exactly the same pattern. You see that there? Exactly the same pattern. A pullback from resistance on Friday. Pre-market, we're up just a little bit. Okay, I could continue that. Let's take a look at oil. I need to turn these closed captions off. They're messing my screen up here. I can't do it just yet. Oil, you know, hanging out here right at 95 or so, strong support at the 200-day average. I want to see a bounce on oil. I'm not convinced. Certainly, this downtrend has not been broken. A series of lower highs, a series of lower lows. Until this high here is broken, I wouldn't go bullish on oil just yet. We shall see, though. Let's take a look at the UUP. I don't have futures on my, not futures, I don't have Forex on Thinkorswim. I haven't subscribed to it. I don't trade Forex, so I don't have it. So I have to use the ETF, the UUP. And you can see the US dollar has gotten a little bit weaker over the last week or so. Whether that continues to get weaker or not, I don't know. Interest rates, as you know now, when interest rates are lifted, that is good for the US dollar. When US interest rates are lifted, that's good for the US dollar. So that's happening this week. It hasn't happened yet. It happens on Wednesday. So I would say short-term prognosis on the UUP would be up. Hedge fund traders, that could be a really nice out of the money, bullish, broken wing butterfly on UUP. So keep an eye there. Another thing I was looking at here was natural gas. UNG. Look at natural gas. Did you all know that natural gas is doing this? Woo! Natural gas is extraordinarily bullish. A nice bounce off this 200-day average here. That could be a nice bullish trade as well. In fact, I'm going to come back to this, and we're going to talk about what we could perhaps do on natural gas. Bitcoin is another one on my list. I just did a quick hunt this morning and I found a couple of trades. Let me take this down to a daily chart here. There we go. So here's, and that's oil. I meant to give Bitcoin. Where is it? There it is. Here's Bitcoin.
Just about to get up and make a cup of tea.
Hit resistance, hitting sideways. Bitcoin doesn't seem to want to keep on going up. We got strong resistance right up here at the 50. We had resistance right here at 24,000. And Bitcoin seems to be dropping in the ETF that is its sister's cousin is the BITO. And BITO is looking the same way. This could be, look at this resistance level right here at 15. See that? 15, 15, 15, 15 resistance held, and looks like BITO is more in its going back to a range. Tomorrow we might put on a go after this with some butterflies, but I'm looking at maybe selling a credit spread up here in just a few minutes when we get into the trading. So Matt, what do you got, man? Have you been? You have any points of view you'd like to share with our fine people here?
Yeah, absolutely. Do you want me to screen share or?
Sure.
Can do. Oh, I'll just get you to turn it on for us, Mike.
Oh yeah, I'll do that. Yes, sir. There you go.
Fabulous. Share this one here. Yeah, so much like what Mike, is my screen showing?
Yeah.
Oh, wonderful. So much like what Mike was talking about in terms of his prognosis on the market, I published in the snipers thread this morning, for those of you that may have seen it, what my prognosis on the market was, and very similarly to Mike. You know, we had a lot of catalysts last week, specifically around earnings, both in the financial sector and the tech sector. There was a lot of catalysts driving the market forward, and the market reacted positive to that. But naturally this week, when we've got jobless reports coming out, and obviously, as Mike spoke to, the interest rate rise coming, my prognosis on the market is still to the downside and still bearish. Whilst there's certain articles that are published that suggest that the market has factored in a whole 1% rate rise, that's subjective as a statement in itself. So yes, some premiums are running high, but I feel that the market still has to deal with that more broadly. So my prognosis then technically on the market with those things in mind is that we're still heading towards the downside. So when we look here, I've got 120 days on the chart of the S&P 500. Yes, we've had 3 days of closing above the 50-day moving average, but you'll also note down here that we have divergent volume, which is whereby the volume is diverging away from the price action, therefore suggesting it's not supporting the upward move in the market. From a resistance perspective, we're right on 400, and we can see on Friday it touched there through the high of its trading range on the day. And it's also right up against here at the 38.2 fib level, which is another key point of resistance coinciding with that 400. So my prognosis, Mike, is that we quite possibly could see a rollover this week and back down to the downside. I feel that we're going to tap 380, maybe even back down to 370, and maybe give the bottom side of this range a bit of a nudge again and see if we can get some form of a bullish catalyst to drive us forward, maybe in the week after.
Yeah, I mean, I think about that and I'm like, what on earth could that possibly be? You know, but
yeah, exactly.
But you never know. That's the thing about the markets. The markets will drop from here unless they don't. We don't know. We're guessing.
Stranger things have happened.
At the end of the day. Yeah, you know, we got catalysts, which is good for money making with credit spreads in particular. One thing I wanted to cover with you as well, and I forgot to mention it, but if you look at the VIX, the volatility index, you know, it's a measure of at the money implied volatility. I'm going to come back to that later. But there's actually VIX futures right here. Okay, we have the VIX. Okay, here's the VIX, and then we have the VIX futures. So we're not open yet. We got 16 minutes before the open. And you know, you can see here, the VIX has been dribbling down. It's down a little bit today with the futures ups, you know, 1/3 percentage point. But, you know, this is showing that the market isn't buying the bullish rally. I mean, if the VIX was down here, it's, you know, somewhere in the 18 level, or even 19 or 20, 21, then that would be more of a sign that the market is expecting bullishness from here, and it's not. There's expected volatility in the markets. It's a measure of the actual expense of the options. It's also a measure of the expected move in the markets. And so all of this is pointing to movement, volatility, one way or the other. My leaning is to the downside, as is Matt's, but it could rise too. It could also rise.
Well, look at last week.
Yeah, I know. I was like, I am sure. Never I'm sure. That's why I'm going to be wrong. Ain't no way. Ain't no way 390 on the SPYs is going to be breached. And that's exactly what happened. It got breached. What, Tuesday of last week? It was breached, and then it kept going all the way up to 400. Strong resistance there. And if that level's broken, then expect another move, perhaps up to 410. So with earnings coming out, we'll see the tech stocks this week. Apple, Microsoft, some big names announcing earnings this week. The other thing to keep in mind is we have economic reports that have come out already today. Let me get the right date here. This is a cool place to see the economic calendar. Market Watch. There's a few other places you can see it. Excuse me. Okay, so these are the reports for the week. Consumer confidence is coming out. Durable goods, capital equipment. I'm trying to see here. GDP numbers come out on Thursday. And then inflationary numbers on Friday, the PCE, the core PCE. This is really could be a big Friday. And of course, we got Wednesday. So lots of catalysts floating out there. So one of the things I love about these long-term credits is that we're kind of like, think of it as in a war, there's the front line and then there's behind the lines, and credit spreads are kind of like behind the lines where we're taking a little bit of money and staying away from all the heat. So that's one way to consider these credit spread strategies. So Matt, we got 3 trades on. Would you like to cover those for
I'd love
people
to.
here?
Well, let's get cracking on those. And if you've got any questions, everybody, feel free to pop them in the chat box and we'll do our best to address those as we go through the session. Can you see my screen there, Mike?
Yep.
Fantastic. Okay, so we've got 3 on at the moment, and you'll notice here that whilst this says we have a total profit and loss of $127 in the red, we've got to remember that these are credit spreads, and there's a couple of things that we need to be cognizant of. One is IV, and the other one is how much stock price movement have we had in the short term that we've actually had these positions on, and is that delta, where's that delta working for us as we start looking at these? So the first one that we've got here was on GM that we entered into last week. So I think this is one that I was playing around with. There was 2 variants of this, Mike, I think from memory. I did the 39.40. I think there was a 40.42 that we were looking at as well. It was the 39.40 that I got filled on for 13 cents.
Let's track the one. Yeah, I had the 39. Let's track the one that I got filled on, because that's the one I put out there. It's the selling the 40, buying the 42. I can show that one if you like.
Sure. Yeah. Okay. Yeah. Sure. Well, we can come back to that.
Okay.
We'll get this one updated for us. Yeah, sure. No worries. Okay. In that case, we'll jump onto the IWM, which is a trade that we also placed on last week. So with the Russell, as we can see, we had a bit of a rally last week, and we'll notice here that on these lines, you can see that it's starting to pull us into loss, but we've got to also think about it, as I was saying before, both the IV on these positions, which naturally, given the bullish run, will be dropping, so that will be favoring our position, but our delta, as we can see up here in the Greeks, is negative. So we've had positive price movement, so delta has worked against us in this case, but we still have time and plenty of it. We still have 70 days in this trade for it to really mature for us. So my thought process at this point in time is, based on my overall market prognosis, I still feel that this trade is good, and I'm not in a position to adjust it at the moment. However, I would start considering adjustment if this started to run hard and we started to get somewhere up here into the 190s. And if that happened quite quickly, as soon as I started hitting this triple top here, I'd be getting concerned. But if we ran past this, that's when I'd be starting to make an adjustment. How would I do that? What I'd do is I'd actually roll this top call down to a 201. So I would end up selling this and buying the 201 to contract the risk out of this trade. So that's one idea of an adjustment that we can do to control the risk in the event that this runs up. But until such time as we actually see that price action, I'm not going to touch this trade. I'm actually quite happy with it. And we're being paid for it at 83 cents a day. So that works for me. So that's our IWM trade. Looking at our RUT trade, and you might remember, for those of you that were on the call last week, Mike actually placed the RUT trade and I found the IWM because it had a smaller degree of risk because it trades in smaller increments than the Russell itself. So this has a risk profile of $1,780, short the 2000, long the 2020. And we can see here again, spoken about prognosis, we're still bearish, still looking technically at what happens if we get to this triple top here. And again, an adjustment would be made. And we can do that simply by rolling this 2020 down to, if there was a 2010 underneath it, to contract the risk out of this position. So both those trades, Mike, I feel are in pretty good shape, especially supported by the market prognosis.
And
Do you
Matt,
want to share your...
and Matt, last week, Matt, you were talking about doing not only contracting the upper spread, but also delta neutralizing at the same time. You didn't mention
Butterfly. Yeah, butterfly.
Yep. So you can do that, especially if you're leaning into earnings and you want to buy yourself time. So think about, by way of example for GM, if I was to bring this trade up here just to demonstrate on the risk graph, and you're right in what you say, Larry, is, well, I can't contract this one because I've only got one strike up the top here. But if this was the 40-42 trade that Mike will show in a minute, yeah, I can squeeze the risk out of up the top, and then I can butterfly the rest of this position to delta neutralize it. So at earnings, I can minimize my risk in the event that the stock gaps one way or the other and buy myself time. Therefore, I can then also adjust out of that butterfly as well and maybe recreate a credit spread. Mike, did you want to show your trade?
Yeah. I want to talk a little bit about something I do that, here's the thing about credit spreads. And if anybody on this call knows what it's like to lose on a credit spread, it's this guy, because I have gotten hammered on credit spreads. Hammered. Like, oh my, I won't do that again. You know, just really decimated. That's how I lost all that money in 2000 was credit spreads. So I know them. I know them well. It's kind of like a bad relationship sometimes. But I stay in. I love them though. So this is the GM trade that we got filled on last week, and we sold at 40. And I just want to give you a context around living with these things in the event they start going against you a little bit. And that's always, as Matt's so well pointed out, as soon as the stock starts rising, if it rises immediately, you're going to start feeling a little bit of heat, perhaps. But you don't have to feel heat. Here's how I do it. Here's how I think of it. I want to free myself up from not worrying about if GM starts rising. It keeps rising, and oh my God, I'm down $200 and I'm getting close to my break even. What do I do? Sky is falling. Oh crap. You know, here's how you handle it. Just stop worrying about it. Have a line in the sand. For me, we were very careful to sell this put at 40. Call spread at 40, which is resistance, support there, resistance there. So for me, what I do is I don't do anything. I'm not doing anything on this trade unless the stock breaches 40. It closes above 40. My short strike in this case, again, strong resistance. Then I do what I call batten down the hatches. Drop the 42 call to 41, and then buy the underlying call spread or sell the underlying put spread to convert it to a butterfly, thereby decimating that risk, maybe getting me down to 30% of the original risk. That's about where you can expect to run. And then, as Larry pointed out earlier, that's a delta neutral adjustment, and then you wait. So imagine, first off, on these credits, you might lose 1 or 2 out of 10, you know, so you're going to be about an 80 to 90% success rate on these things right out of the chute. But when you start to, you know, put this kind of protective mechanism in place, you can just let them run, the outcome of which would be to reduce your average loss in the trade and thereby increasing your average profit per trade. So we'll talk more about that Wednesday on the group the group coaching call, because I do want to get in there. I do understand what it feels like when the stock starts rising in a bearish credit spread or dropping in bullish, and what that feels like when you start to see immediate loss start to happen. You know, at the end of the day, everybody know this. At the end of the day, at expiration, theta wins the battle. So that's what this is the same trade that Matt had. It's a double wide trade. Again, everybody, please do yourself a big favor and start with at least 2 strikes apart. Have there be an intermediate strike where you can contract and squeeze the risk out. That's the idea. All right.
And the other thing, Mike, as well, we spoke about last week about when you put the trade on, clear your mind, get that trade plan in there. Someone mentioned last week about setting alerts in your trading platform if it's available, and let the trade manage the trade, but let the trade tell you when it needs to be adjusted. You've defined it at first. Don't muddy the waters. Give yourself a clear path forward and clear thinking. Pop your trade plan in, set your alert, and manage it to that trade plan.
Yeah, man. Exactly. One thing, Matt, you were showing a different view of the trades. You know what? I like to go into portfolio performance so I can get all the stats on the trade. The alternative place you can run, you can go into trades, save trades, P&L, and you can look at your trades from a folder. You can't do portfolios here, but if you have just a folder with trades in it, this is a valuable way to present your trades. I would say for most people, you know, I like this. I like to portfolio performance because I can run a report on my open trades, for example, using portfolios. Everybody in this class, you were given a video on how to set these up, and we can help you with that on the coaching call if you need it. But that's just to clear that up a little bit. If there's any questions, that's another interesting way to present the data. All right, we got about 3 minutes to market open. I get so excited. I love it. I love the pre-market. Let's take a look and see what the futures are doing.
Well, I was just about to say they're coming back a bit.
Are they?
Marginally green.
Mm-hmm. Oh, they're not as hot as before. I'm going to do a 1 minute bar and let's see what we do into the open here. So if you have Thinkorswim, or maybe the broker you have also has it, you can do a minute bar where you can see what's been happening this morning. And yeah, we're dropping in. Futures are dropping into the open. Yeah, we're pretty much flat, 0.15% up on the futures currently. So we'll be open here in a couple of minutes, and we'll come back here. Oh, the other thing I wanted to mention is on Friday I did this trade here, and it's a put ratio butterfly. It's an advanced strategy. It's more for hedge fund. It's a hedge fund way to use calendar spreads, and I'm going to cover this tomorrow during our hedge fund live call. But this is what could happen. This is what an estimate of what would happen if the market's corrected and IV rushed this trade here.
That is, I love that trade.
Is, right? Oh my God. I love this. This is my favorite trade to do at a market top, what I believe might be a market top. So here we're looking at the futures are kind of flat. We got room for it to run up a little higher. Again, we're at 3,900. Well, this is the SPYs. We're at 400 resistance on the SPYs. Looks like we might be coming down. Here's the trade just quickly. It's in the sniper thread if you want to, not the sniper thread, hedge fund thread. You can see it there. But this is right out of this hedge fund live thread. Now, listen, everybody. Please hear me. Please hear me. These are live threads on Friday. Woohoo!
And we're off.
Yeah, no, it sounds like that bell too at a horse race. So this is what this feed is for. It's for live stuff, right? It's a live feed. Friday morning and Friday afternoon at 30 minutes before the market closes, I'm like, I think we're coming down from here. And I went and put this trade up, and I got filled on this in my own account. And I shared the whole idea of a put ratio calendar spread. We can still do another one tomorrow. But I would really encourage all of you to get into your live feeds. These are WhatsApp live feeds. You know, Matt posted some good content this morning. So this is live tidbits, little nuggets of information, trades. If there's an adjustment that we see, either Matt or myself, or even Hank or anybody else that's out there actively trading, you can post those kinds of live tidbits in these two groups. I have two, one for snipers and one for Hedge Fund Live, because not everybody in Hedge Fund Live is in snipers and vice versa. So there's a good overlap, but some people just want credits. So we've separated it out. I know it's two of them, but credit spreads here in snipers, hedge fund strategies, and more advanced strategies in Hedge Fund Live. Okay. So I want to just kind of do a little scanning here. Let's see what we can find. So the first thing I'm going to do, by the way, GM, nothing to do. I'm not worried about GM until the stock gets up to 40, and I don't think that's happening. I just don't think that's going to happen. If it does, then we'll deal with it. But yeah, and that's on my radar. I don't have to really think about it too much. Even if I'm losing money temporarily, you know, I've got my plan. So let's go ahead and go into searchers, single strategy, call credit spreads. And I'm going to cast a wide net. And I'm going to go after all optional stocks and indices, kind of like fishing. Get a net and just cast it out against the whole universe, see what's out there. Now, this data is from Friday. No, everybody. We don't get live data in Tom's tools until about, 28 minutes from now at the top of the hour, 10 Eastern. That's when we get the real data. So
updates 16 times a day, I remember Jay saying.
Is it 16? I didn't know that.
16 times a day.
Yeah. Yeah. Wow. That's good to know. All right. These are bullish ones, or bearish ones, excuse me. And here's one on BITO. And I kind of like this one. I don't like this 68% probability of profit. I want that to be higher, but the one that came out of the scanner is showing 39% ROI. So I could easily slide this credit spread up and increase my probability of profit. Just so you remember, this yellow column is probability of profit. 68% isn't high enough. This one is the potential return on investment, maximum ROI. That's 39%. I don't want 39%. I'll take 10% or 15%. I would take that with a high degree of probability. So I'm going to go after it. And then I'm just going to lift up the strikes. Now, if I was to go to a live chart, let's just see what it's doing live right now. BITO. Okay, let's go to a just regular old day chart. So I'm looking at this thing going, let's zoom in a little bit. Channeling. Oh, it's down today. Woohoo! So 16 is strong resistance. 18 is even stronger. I would love 20. You know what? I would really love it if we could sell a 27 call spread. I would really love. We could, but we wouldn't get any money for it. So we got to come closer to the heat. 20 would be nice, really nice. 18 is about as close as I'd want to get on this one. So what I can do now, let's try for 20. Let's see if we could sell a credit spread right up here, well above multiple resistance levels. This is a strong one at 18, by the way, super strong. Strong one at 15. And then let's see if there's anything at 20 available. Maybe not. So I'm going to show you a shortcut here. I'm conscious not everybody has Think or Swim, but I can get a rough feel. Let's see, the expiration date is September 30. So I can get a rough feel for the kind of credit that's available at different levels by going into the live option chain. And then I change my spread type to vertical. And then I can come down these I want call spreads for September 30. And then I can kind of get a feel, a slight feel for what's available at 20. So here's the 20, 21 vertical call spread. And I could see there, it's given me about what, 9-10 cents on 90 cents of risk. So it's about 11%. That's probably good. Let's try here 15 cents at 2022, which is what I want to sell. So let's go back in here, edit the trade. Again, these prices are Friday's prices. I'm going to have to kind of force feed it a little bit. And I want to sell at 20 and buy at 22. Again, 2 points between, at least one strike between your short and your long strike. Please do yourself a big favor. And this one is showing currently the September 20 to 22 is showing 14 cents credit. That's live. That's about what we have here. Okay, so 14 cents credit. You can actually force feed this. Just type in 14 cents credit there and 0 here. That's the same thing. It doesn't matter that the buy price is 0. That's what's available at 20. Right now, as I speak, has an 87% probability of profit, but you're only going to make 7.53%. That's a little bit low for me. I want 10. That's my line in the sand. I want at least 10%. So what there is to do now then is I'm going to duplicate this tab and I'm going to drop it one set of strikes. So we'll drop it 1 point to 19, 21, risk graph. And now we're getting 20. There we go. That's more like it. So now I'm getting over 10%, and my probability.
Are you worried about the slippage there?
Let me finish, and I'll get that one sec. So now my ROI is 83.8%. So Larry, you're asking me about slippage. Am I worried about slippage? It's a little hot. So what I want to do now these are way out of the money. So here's how you can analyze the slippage. When I'm looking at 20 here, 19, there's 19, it's 10 cents wide. That's about 20% slippage. And then but then when I look at the money options, the options that are closest to the stock price, 13 and 14, you can see that slippage on the 13 is about 10%. Okay, slippage here, that's a little wider. Slippage here, within about 10%. So the point is the slippage at the money is tight. The slippage further out of the money, not so much. The point is that if the stock does approach our short strikes, then that slippage will tighten up to what the at the money slippage is. Does that make sense? So whereas right now the slippage is wide, the point is if the stock does in fact come close to our short strikes, which means we have some potential actions to take, the slippage will tighten up as we get closer. So I'm not worried about it for that reason. Larry, did that make sense?
We'll talk more Thursday.
Okay. Slippage is not a problem at the money. It is a problem out of the money, but we don't have to worry about these out of the money options until they become at the money options. And by that point, the slippage will tighten. So that's the point. Okay. All right. So now let's go after the 1921 and see what we can get. It's a good question, Larry. It's an important question. It's really an important question that everybody needs to get behind. You got to get your sights on it. All right. Now, if I look at the live price for this one, So selling the 19, buying the 21, 15 cents credit. Now I'm just going to force feed that 15 cents, none up top, risk graph.
There's slim pickings in the scanner at the moment, Mike.
I know. Well, no, we'll have more in 20 minutes, but that's what we have now. So this one's offering 8%. You know what? I'm going to go for more. I want, let's say if we got 18 cents. I'm going to ask for more than is available. Let's see. We've got 15 cents is the mid price. I want 10%. 18 cents gives me roughly 10%. So I'm just going to set a GTC in here for 18 cents. How many do I want to do? Let's see. 182 per contract. Let's keep our risk. It's 25.66 would be around $1,000 if my math is correct in my little head here. Let's see. Yeah, there we go. Let's do 5. Get us under 1,000. It's 182 per contract if you get filled at this price. Yeah,
You don't ask, you don't get.
You know, exactly.
Nothing worse than hitting confirm and send and it dings straight away.
Can't stand that, man.
Yes.
Yeah, I always want to start a little more aggressive and then pull it back because you get filled immediately. It's like, darn it, I could have done better.
Yeah.
But yeah, it's only a few cents typically, but all right. So we're going to go for 18 cents and I want 5 contracts. Let's do 5. 18 cents, GTC, confirm and send, send. If you really like this trade, then one move you could do is to drop the spread one more set of strikes. And then you're at 18. I'll do that just for sake of example. Edit the trade. And let's drop it to 18. And then 20. My voice is messed up today for some reason. It wasn't from all the partying I did this weekend. That's not the reason. Because I didn't. Yeah, here we go. This is 17% and an 80% statistical probability of profit. It's not worth that now, but that's also a decent trade as well. Let me show you what it looks like live currently. So if we did the, what was it again? Sell the 18.
By the 20.
And by the 20, yeah. Let's see what that gives us. That's about 20 cents mid at the moment, which is a lot less here. So that's because BITO has dropped. So we do 21 cents is the current price. You know, one of the things you're seeing here, everybody, is how to use Tom's tools in the first half hour of the day. You know, that's how we're doing it. We're finding trades. We're building them on Friday's data. And then I'm going into Thinkorswim and I'm getting the actual prices right out of the live environment. And then I'm plugging them in here. So this is how you can trade when the market's live and the data is not yet live. So that's a good one too, actually. I mean, probability of profit is 80%. You're getting 21 cents credit, 11%. So that's the idea. Let's see if we get filled on this BITO one. I want to try to stay at 19, get ourselves a bit of extra protection in case the trade rises from here. All right, Matt, do you have anything? I've got a couple more trades, but if you have anything you'd like to share with us, you can take the con.
Yeah,
buddy.
I've been doing a fair bit of scanning. There is a trade that I have come across a little close to the heat, and the probability is a little bit low, but I'll share it and see what everybody thinks. And I'll then tell you my reason for considering this trade. So this is a call credit spread on Las Vegas Sands. Now they announced earnings on the 20th. It actually missed earnings. And the stock, as we can see here, has run up as part of the overall market rally last week, pulled back a little bit on Friday. And as I look at the moment, is actually up this morning. So we can see we are very close to the heat here with this, because the way I found this trade in TTR was actually through the scanner using short term. So what it does by shortening the time frame to increase the return on risk is we're getting closer to the heat here. We're closer to the money. We're not so far out of the money. And that's how it's presented this trade for me. Now I've modified the trade. It was originally showing me a 40-50 and then 41.50. So I started playing with the strikes a little bit, remembering to give us that extra strike so that we can manage risk in the event that the stock takes a run. And I still felt that I was a little bit too close here. So I duplicated the trade, moved it to 41.43. So we start thinking about resistance. Let's look at the chart. We can see here that 36 has historically been a resistance level, but we can also see quite clearly that 39 has also acted very strong in the past as well as a resistance. We can see that we've got a couple of highs here throughout the day, and then it's sold off. It's rallied sideways. It's come back up. We can see we had earnings, popped on earnings, closed under this 39 level again. And naturally, by proxy, this stock works in 5-point support and resistance increments. So 40 would act as a price resistance as well. So by selling at 41 and buying at 43, again, we are going to be close to the heat. It is 76% probability, so it's a little lower than what I would like. It is 12% return on risk in 7 days. So doesn't quite meet my criteria to put it on mic, as it is a little bit close. But for those of you that I suppose like to get a little bit close to the heat, that is one that you could consider.
Yeah, these short-term credits are, this reminds me of a trade I did. I was teaching a class in New York, and this is this is gunslinging, everybody. This is not safe as long-term credits. You are in the battle. You are on the front line. If this stock keeps on running up, then you're going to lose. And so that's the thing about we haven't really covered short-term credits in the hedge fund course. I like them, but only the really exceptional ones when they are backed by exceptionally good news or exceptionally bad news. I like them. An example could be, let me show you. I want to say
the only catalyst we've got here is that it missed earnings. Oh, sorry. And when you look at the earnings effects post earnings, it drops 5% historically. That was my other catalyst.
Yeah. And then what? Yeah. So I totally agree. Here's the deal. First off, this is not quite what we call. I'm using live charts so we can see the current date because we don't have this yet. So earnings came out and the stock gapped up. It's now above this 200-day moving average. All right, so that's support. One of the systems Tom has that I like, actually, and it wasn't originally the basis of what they used to call V3, which is the velocity system. And the velocity system, this is not a volume spike. This is twice on this big gap up here. The volume was about twice normal. All right, and the way you trade these, well, first off, the requirement is 3 times. So it's not technically a velocity or volume spike trade, but in those events, you want to look at waiting for the stock to either breach the high or the low of the day. And those are the two lines in the sand you want to look at. And this stock has support at the 2-day average. It could very well bounce there. If I'm selling a credit spread above where the stock is, I don't want there to be any downside support. So I like these trades, but I'm very, very careful. And I know none of you, not most of you, I should say. Well, I haven't taught this in the hedge fund stuff in the recent classes that most of you have been in, and we're gonna do more of them. The way I like to do them, as well as the way Matt did. Great analysis, Matt. It's either going to work or not, like all our trades. But I like my favorite short-term credit opportunity, and where snipers came from, quite frankly, the word snipers came from, and that's where Matt and I and a handful of other guys and girls got together and we did these kind of short-term credits. They're great when they work. They're amazing. So just quickly looking at the top 10, we can do this in Tom's tools as well. We'll cover this on Wednesday. We'll go more into this. But I just for sake of discussion, let's just see the biggest train wrecks of today. And there aren't that many. I mean, you can see here this stock. Well, you know, so that's what I like. I want to see Armageddon, you know, like what the hell? The stock has tanked hard. Maybe I want to sell up here if the news is bad enough. And then I come over here and check news and there isn't any. Well, today's the 25th, so there's no news for today. TBLT, tough built. Yeah, let's try the other.
Hey, Mike, Andrew just wrote in the chat. He's I hadn't had an opportunity to check the news on Las Vegas Sands. I'm definitely staying away from it now. 2 analysts are bullish on it. They've just done price target raising 45 and 59. Yeah, I wouldn't go near this now.
Yeah, maybe I would do you know what I do like, Matt, is if the stock.
Thanks, Andrew.
Yeah, Andrew, good for looking that up. If we do get a breach above 40 here, then come underneath, sell a put spread, maybe 37. So yeah, it's a good looking setup, and I would be, yeah, especially with the news, I'd be very cautious about selling a call spread up here, for sure. But okay, now, so we'll do more on short terms as we go along, and when they, you know, Matt knows the system, both of us do, and when we see the kind of the low hanging fruit, here's what I like: crappy earnings. Oh, we missed our earnings tank volume, and the news it's bad this quarter and it's going to be worse next quarter. We're lowering our future guidance. That actually, one better than that is a sell recommendation. When those happen, stock tanks, IV rushes, we come in and sell where the stock's probably not going to go to up. Why would a stock rise when they've lowered their future earnings guidance? There's no reason. So, all right, natural gas. I'm going to do a quick put spread search here. We've got 8 minutes. Long-term out of the money put credit. I'm going to go after the universe first. Now, why am I doing puts? You'll see why in just a minute. All right. And then I want to go after UNG. Okay. We didn't talk about gold or silver. The UUP is, it's volatile. I don't know where it's going to go, quite honestly, from here. Gold and silver. Yeah, it looks like we might be bouncing, man. Silver as well. Silver is dropping a bit. I wouldn't put a put spread on silver, but it's at a discount, obviously. And at some point, we're going to see some money flowing. Especially if the market starts correct, we'll see money coming into silver and gold. Bonds even. And we might have a risk-off move. So I wouldn't do anything on this just yet. Just looking at what's on the screen here. There's BITO. I wouldn't sell a put spread on BITO. Although you could. Here's what I'm going to cover on Wednesday. Hey, Matt, you know what I've been experimenting with is, you know how we sell these long-term out of the money call credit spreads and put credit spreads? The system I'm experimenting with is to start with, instead of like BITO, for example, we're trying for a call credit spread, put a put credit spread on, widen the strikes to 2, you have 2 credit spreads. And then if the stock starts approaching one of them, you batten down the hatches there, you take your profit off the winning credit spread on the other side, and then you butterfly. And I practiced it on FedEx, and I dropped my risk a whole lot more. And there's potentially more ROI. So I want to cover that on Wednesday as a potential way to approach these long-term credits. So we'll cover that. Now, I don't see anything I like or bullish, but I'm attracted to this one on UNG, natural gas. super strong support down here at the 200-day average. It's been rising. The all the energy constraints in the U.S. have, you know, the heat wave that we're having. I heard that. Hey, Matt, I heard that in Houston. I'm going to Houston on Friday, and I heard that the temperatures are in the hundreds in Houston. I mean, I've got that coming up for 10 days starting Friday, so we'll see how that works out. That's hot. Okay, natural gas, nothing came up. Well, that doesn't mean I can't do a trade. What if I'm looking at 18 down here. I'd love to sell a credit spread down here at 18, yet the scanner didn't give me a trade. That's okay. I can build my own. I know what I want to do. I want to sell the 18 puts and buy the 16 puts down. So what I'll do is go to options, option chains. Let's go find 90-day options, update. I was playing with this earlier.
Hey, Mike, quick question. EMC22 has asked, could you do a search for increasing ATR to try and find some of these candidates?
Yeah, you can, definitely. You could use that. I'll show you that in a minute.
Jay David, you asked if we're concerned about the Greeks being negative. Given the fact that we're selling a credit spread, you will find that your delta is negative in these positions. And we can take you through in detail how to neutralize that delta or minimize it to help protect you in the event of stock gapping, rand earnings, or any other news. So we can definitely cover that for you as well.
Yeah. We the whole batten down the hatches is how you handle that. Contract, butterfly, contract, butterfly. You want to, if you haven't practiced that yet, not everybody has. Actually, most people haven't practiced it. And if you did practice
Let's
it,
go.
you would find.
You have any zip ties?
Can we get a mute button here?
Oh, zap strap.
You guys?
No, it's in this guy. Jeez.
Yeah, let's mute. Thank you. If you did practice it, you would be a big fan. And here's the possible trade for us here on natural gas. And the IV is up. So the IV is running hard. The demand for the options is increasing because natural gas is on a mega bullish run. So why don't we come in underneath and sell down here? And again, that level is 19. Did I do 8? Oh, I did 18. 18 here. So we start with a wide credit spread. And if in fact natural gas starts to plummet, it's possible it did it over here. But we got protection, various protection levels, including the very strong 200, including 3 bounces off 18. So we've got good protection levels in the event the stock tanks. I'm going to go ahead and this one. We could even drop it a little bit more. Probability of profit is 88.5%. Statistical probability of profit. The only reason we're getting almost 15% on this trade is because of the IV. And it looks like natural gas is it's up for today, still rising. So I'm going to go ahead and place a trade. Let's see what we can actually get for the 18-16 put spread. I'm going to click the bid on 18 and then buy the 16. Control click. 28 cents credit currently, which is more than I have here. Yay! Thank you, sir. The only reason that could possibly happen is the IV has risen. Since Friday, the IV is rising. So let's sell some of that delicious premium. It's got 28 cents. Man, I'm going to go for 30, man.
I reckon you should do it.
30. You think I should? I think.
And then hammer the market maker with a cancel replace and see if it fills.
Yeah. Yes. I got another idea of there's a way to manipulate the mid price using OCOs. I'll talk about that next week. All right, how many do I want to do? Let's do 3. No, I'm doing 1,000 on these trades. So what would that be? 6? If my little mind, my little math mind has got that correct, it should be around 6. Yeah,
It's done right for a Monday morning.
Yeah, not too bad. I'm a little surprised actually. So let's go after 6. So this wasn't even on my radar until this morning when I went through the brief market analysis that I do every day, and I saw natural gas. I was looking at my futures. There's a natural gas future that I had loaded, and I looked at it and I was like, holy crap, wasn't even on my radar that natural gas was so bullish.
And Mike, Andrew says he got 30 cents on natural gas, so maybe pop in a cent or two more.
Yeah, I got to beat Andrew. Andrew, I'm not going to let that. I'm not going to let that stand, man. I'm going to have to beat that price. So I'm going to go after 6 contracts, 31 cents. Confirm and send.
Catherine got 30 as well.
Go, Catherine. Let's take this down to 30. Well, it's not fair. I haven't got filled. I will though. I'm sure of it. So I've got the order in for 30. If it fills, I'll go ahead and track. We've also got the BITO in for 18 cents. It's currently at 16. I'll track these if they fill. I want to make sure I do want to get this one filled. I'll let it sit there for today. I think there's a good chance. Cancel, replace.
Where there should be, Suzanne and Bob also got 30, so it's out there for you.
All right. I'm not getting it. It's not fair.
The other thing that was really cool on that chart, Mike, is, and I know it's not a system that we teach here, but there was a good strong darknet buy that was sitting right at the bottom of that pullback, which is fantastic as well. So another catalyst and another instrument to go along with your prognosis.
Yeah, absolutely. So I'll go ahead and track this at 30 cents since y'all got filled. So when you track, you want to, this is what I do. I get a name. This is a long-term bull put spread, UNG. I save it in my folder, and all of our trades are open currently. But when we start closing them, I'm going to create an open portfolio so that I can track just the opens. And we'll do that as we get along. That's portfolios, and we'll cover those as we go along. All right. Well, let's see if we got any questions. It's we're to our end of our hour. Oh, M was talking about using average true range. Yeah, there's a lot of different tools, M, that you can use to discover direction. You know, if you go into stocks, let me get rid of that. Stock rankers. There's one that I like a lot, which is close percent change. And these are the stocks that have, now we're actually after 10 o'clock. So now I can get live data. Okay, so now it's 7:25. See that there? That's the timestamp. That's the data is live as of the open. So this isn't like current data, but it's the open data. And now we can start playing a bit. But here you can go right into the wizard ranking and you can say, all right, over the last day, how did I get here again? Stocks, stock rankers, close percent change. You can also look for average true range as well. And there's a lot you can do with directional analysis in Tom's tools. And so one bullish and bearish, you can go after any market index you want, penny plus weekly. I like bearish though, man. If I'm looking for credit spreads, I want train wrecks.
Yeah, I was just about to say, this is how we used to find the train wrecks.
Yeah.
When we started snipers.
Yeah, this is one of the tools.
One of the tools.
Here's I never heard of Canoe Incorporated, but these are all down 5 and 6% today from here up. You know, Root, Beyond Meat. What?
Wow.
But they have the pork now. They got fake pork. How could they possibly be dropping? I'm just joking. But Beyond is down a bit here. Yeah, so you could check the news. But yeah, Matt, I like that you raised the short-term credits. It's something I want to introduce, but nobody here really has been taught them. There's scanners for them. We can start sprinkling that in, Matt, and then let's just the lowest hanging fruit. You know, the ones that just have super high probability. I got 30 cents.
Yeah. Hey.
Hi. I don't feel left out. No. Good.
I haven't seen anyone write they got 31, so you're doing all right. Everyone's cheering for you though. Now,
Yeah.
Mike, you've got a couple of questions. So Emmanuel was just saying, in terms of using ATR, searching for train wrecks, and what are your thoughts on ATR and looking for train wrecks?
I mean, how do you use, average true range is the average range of the stock, so, and that can
I think you'd want something that's a little bit more, look for a scanner that finds a larger price movement rather than something on an average range, right?
yeah, like an exceptional movement is where I like to play with these things. An exceptional movement, average true range is going to say, well, the stock generally moves, 2 points a day or whatever.
Yeah.
That's not useful for me. It might be, now where it would be useful is if you're in a trade and you find a train wreck, like we just have a list of little train wrecks here, not big train wrecks, so I'm not super excited, but you find your train wreck and then you can derive your ATR using the scanner and say, all right, does the stock, is the stock ATR 6.75 in this case? And what that would mean is that, you have, in a day, the stock could move against you. That's not going to happen, though. You're not going to see that when you go after the exceptional moves. So sniper, the idea of sniper is to find the exceptional moves and pick them off, from a distance with high probability. That's where snipers came from. And you can do credit spreads any way you want. If you like the ATR version, you can run the ATR scan. I don't do it, but you could. If you like ATR, you've got you're attracted to it. You like
what for mid to long term credit spreads as well, because based on history, you've got that range to work within. You could formulate that into where you want your break evens to be.
Mm-hmm. Exactly.
Question from Andrew. Mike, if you wouldn't mind just bringing up your UNG risk graph, could you talk to your thought process around if it starts falling, where would you start thinking about collapsing the risk out of the trade and butterflying? What are your thoughts on that?
Yeah, that's a good question. It's going to be the same as I've just got to find the trade. What did I do with it? I'm going to pull it up out of the folder here. Okay, no problem. I got it in the folder. Yeah, the way I look at it is this way. So I'm not worried about, UNG is out of my consciousness unless the stock breaches support. And as Jay David was asking, the delta here is positive. I can tell because if the stock drops on my risk graph, I'm losing money. So the delta must be positive. And it is. You can see it here in the risk graph as well. Stock rises. That's good. So our delta's working against us in the event of any immediate pullback, and delta is working against us. That's the nature of these trades. If the stock ever, at least in the initial stages of the trade, if the stock drops, you're going to be down. It's what happens. And so for me, because of the power of support, let's pull up a chart, a live chart. The power of support, the 200-day average, my short strike is what, 2 points beneath it, beneath these pivot points. I don't do anything on this trade unless the stock closes below the 200-day average. I don't even think about it. Let it do what it's going to do. I've got my adjustment in mind. I don't do anything unless the stock cracks below, closes below the 200-day average, which is 1942. We get a close beneath it, then I'll batten down the hatches. I'm going to contract and butterfly and get my risk down to a small amount of money with no directional, at least short-term directional risk, totally mitigating directional risk. Give myself time to adjust the trade perhaps, but certainly get my risk down to a small amount. And then I can go after it with broken wing butterflies. Broken wing butterflies on, and you could even start with a broken wing butterfly. You could put on a bearish broken wing butterfly right now, and another trade. So just in case, I use them all the time, Matt, just in case. I'll put them on just in case. Well, AT&T.
Insurance policies.
Yeah, they are. They're hedges. They're hedges. And so if the market starts dropping, I'll make money on my broken wing, and that'll offset the temporary loss that I'm experiencing in the credit spread. So that's a part of it. I can do it now. I can do it after I batten down the hatches and squeeze the risk out. And then I got to go, maybe I got to go make $200 on a broken wing butterfly. So there's a lot of advantage to your psychology if you adopt this approach. Don't even worry about it. I'm not even going to touch it. It can do whatever it wants. It can drop all the way down to the 200-day average. I'm not going to do anything. I let it run. I let support do what it's supposed to do. Often it does. And if it doesn't, batten down the hatches and go make, let's say, $200 on a broken wing butterfly somewhere else, or even adjust the resulting trade, or even do the Paul Matador adjustment where you add, more than, you ratio your credit spreads and create a Matador. There's lots and lots you can do. But here's, I'm very familiar, like I couldn't even tell you how familiar I am. I couldn't express strongly enough how familiar I am with the case where stocks move against you. Me, it was personal. The stocks moved against me. And I'm like, oh God, what do I do? Should I stay another day? What if the stock goes up from here? I lost a lot of money in 2000 with that psychology, and it was excruciating and it's stressful. So here's an approach. I don't do anything. I'm waiting. I got my line in the sand. I'm going to be down if the stock's down here. I'm going to be down. I know I'm going to be down. The stock's at 20. Oh crap. I'm down. What do I do? Nothing. I'm waiting for the 200-day average to be breached. A close beneath the 200-day average, batten down the hatches, get my risk contained, and then go make $200 back. That's a very rough number, and there's a lot of dependencies on all of that. And if you're not
Try to the rules.
Yeah. Like you said, Matt, you can even put that in your risk graph. What's my adjustment criteria, or your technical loss adjustment. You can actually change all of these here and create a little trade plan. So adjustment trigger. Can you hear those howler monkeys? Stock closes less than 200-day MA, batten down hatches.
Andrew's all over it, Mike. He's got his TOS alerts in place at 23 and 1942. Nice work, Andrew.
I'm not surprised, man. Andrew's a beast. All right, everybody. All right, so tomorrow, man, I'm gonna let you wrap up a little bit to yourself, but tomorrow we have the Hedge Fund Live, and please make it, because I want to talk to you about the beauty of these trades right here. I told you about that earlier. We're going to talk about these are ratio calendar spreads. We're going to start to incorporate those into snipers under very specific circumstances, which in our case is it looks like market's topping and it might drop from here. Probably will, I think. Let's see what the spies are doing real quick.
I was doing the same thing.
Hey!
Saying that.
Oh, now I got to see how the trade's doing real quick, because we should be up.
I will say, everybody, that trade that Mike has shown you, it's an exceptionally good trade. I encourage you, if you can attend the session tomorrow, to see him take you through it live, to do so. And I further encourage you to do some back testing on it, because it is a very elegant way of hedging.
It's elegant. I would even say
I'd use a different word, but I'm just getting started.
Yeah, I know. I was thinking the word sexy was floating around in my conscious.
Let's get there.
It's delicious, this trade. Anyway, I'll show it to you tomorrow. It is up. It's made money from over the weekend. We got 2 free days of data for Saturday and Sunday. So the market's pretty much flat. And as long as actually I got it on the, this is the spies. So yeah, this is where we are currently, sideways. Fed meets tomorrow, Wednesday, strong resistance. If this thing goes sideways, we make money. If this thing tanks, we can make a lot of money. even if it goes up above 400, we still make a little money. So,
Mm.
so anyway, we'll cover that tomorrow in great detail. And I'll look for a live one as well. So if you didn't get the one on Friday, because you weren't watching your sniper live feed, or hedge fund live feed, I should say, keep your eyes there. It's meant to give you a constant lifeline into the world of Matt and Mike and Hank and some of the other people that contribute. This is what we're looking at. These are trades that we like. These are potential adjustments. And so it's a nice, it's also an energetic feed as well, like a umbilical cord into the world of active trading and the consciousness that resides there, you know? How about you, Matt? Is you ready to go to bed?
Right. I am. What is it? 12:15? You know, the markets are open. I'll get a couple of hours sleep and then, you know, come back and see what it's done.
Yeah.
And start the day again. It's fabulous.
You know what, man, when I lived in Australia, I used to love it. To me, getting up in the morning was like Christmas. There was something waiting for me, like a present. Sometimes
Yeah,
they
we
were
get good. Yeah. I was going to say the same thing. Every now and again, you get a Christmas present that you really don't want. And unfortunately, these ones you can't re-gift. So you just got to deal with what you're given.
Yeah. Awesome.
Well, Mike, another brilliant session.
Yeah, thank you. You too, man. Good job.
Sensation.
Keep moving. Yeah, and good discussion. So tomorrow at 3 p.m. Eastern, we do Hedge Fund Live. We'll talk about the ratio calendars amongst the other trades we have going. And then Snipers group coaching is Wednesday at 5 p.m. Eastern. And Matt will be there, and we're going to talk adjusting. So there's a lot of questions about what to do on these when these long-term credits go wrong. And we're going to cover that. I'm also going to prepare another way to adjust these things with condors. So we'll talk about all of that coming up on Wednesday. So it's good to see everybody. Thanks for joining, everybody. If you got questions, you can reach out to us at support. We've got the discussion boards, the WhatsApp chat. So stay in the game, everybody. Much love. Pura vida. Hasta luego.
Have a great day, everybody. Catch you soon.
Thanks, Matt. Thanks, Mike.
Thanks, everyone.
Welcome,
Bye.
guys.